Great morning, fellow traders. This is Austin. It is Thursday, March 9th. It is futures contract rollover day for the CME listed stuff, including stock index futures, which means volume is split between the outgoing contract, which in this case is March, and then the incoming, which is June. It was split yesterday, it's split today, it'll be split tomorrow. That's in percentages. That's just how rollover goes. It's a process, not an event. It's an event in the pit, per se, but it's a process in reality. And there was a time when I wouldn't work this session because it's usually low range, split volume, spiky and choppy, and generally sucks. But those were back in the days when markets were more expansive in general, and I was using a bigger type approach, if you will. And I didn't intend to do a video today, but it was spurred by a couple of things. One, I happened to get a email offer from a different educational service. I don't know how long they've been around. Really nice, slick web page, really nice sales pitch, and they have a staff where there's a lead trader and there's a office girl and there's a marketing manager, who calls you on the phone and tries to pitch you on the several $1,000 software, whatever the case may be, that type of thing. And but the part which is, I've seen hundreds of those come and go in the time that I've been here. But what caught my attention is in the list of attributes of their approach, it said, we hold for big trades and we don't use multiple contracts and so on and so forth, just one contract. And it hit me that, that's one of the problems of this industry, the lies. And all of those fly-by-nights that, throw up the slick web pages and have staff and whatever, and they come and go in a year or two or three, do is prey on the natural human instincts of fear and greed. And of course, both of those are strong in traders, and both of those are why most traders fail. Greed is a very powerful thing. It affects me just like everyone else. I'm affected by greed and fear, just like you, just like everyone else. I learned to control it. And so I thought to myself when reading it, well, what kind of advice is that? Is that what a professional trader does? I mean, is there a reason why money managers have small targets with multiple contracts? If it's superior to just trade one contract for big targets, then why don't professional money managers do that? I guess the same question could be asked a different way. Why don't all retail traders trade like professional money managers do? Okay, and the way professional money managers trade, guys who are CTAs with funds and in commodity pools and things, they trade multiple contracts for small targets. That's what they do. Okay, now understand fear and greed grips most people. I would say it grips the ignorant who are not yet learned, or the stupid who just prefer to pretend otherwise, right? But I'm going to assume, I'm going to guess you're smart and you're not stupid, and the facts that trading isn't like that. At least certainly not most of the time, because most of the time markets are rangy and contracted and whatever. And that's all of them. So here's today for me, and I'm done already. By the way, it's just past 10 a.m. Eastern time. I was done right around 10, but took one sell signal in the S&P in the June contract coming in, and I was short from 20 for whatever difference it makes. The 2381 area. I'm sorry, 2361 area. My eyes are poor, and there's been like a 30-point range in the past week, mostly overnight gaps. But the short 2361 area, and then stopped at 2362 for minus 1 point, and then there was a reversal. It has nothing to do with the trend bender here as the signal, mind you. This is just nor am I working from a 1 minute chart. So please don't be confused. Please don't assume that the fact that this went from red to green is the reason why I entered a trade, because it had absolutely no reason, no bearing on where or when I entered the trade, just so we're clear. The reasons for that are not on this chart, and this is not the time frame chart that I'm trading as well. But anyways, it just so happened that the reversal off the stop was a pullback long from the 62 zone, and that went to the 65 zone where it closed out. So minus 1 point, plus 3 and a tick, and I'm done. And the net result there is plus 2 and a tick. Okay, and I say 2 and a tick because that's all relative to what size you would be trading. If you're trading two contracts, if you're trading one contract, that's $112.50 in the S&P. If you're trading two contracts, that's $225 net. There was minus 100 here and plus 325 here, so it's net 225 minus trade costs of 3 contracts turn. Okay, so it's 200 plus for the day. If you're trading 4 S&Ps, that would be 450 gross. If you're trading 8 S&Ps, that would be 900 gross. Okay, if you're trading 10 or 20, it is what it is. If you're trading 20 contracts, it would be $2,200. It would be $2,250 gross if you're trading 20 contracts. It all depends on what you want to trade, but I'll tell you what you can't do. What you cannot do is the same thing I cannot do. You cannot trade one contract for 10 points. That would be $500 because the daily range isn't even 10 points most of the time. That's just flat physically impossible. All right? So getting our mind right and being in sync with the market is a critically important part of successful trading. At this moment in time, I mean, well, for the past several days, look at all of this. This is the S&P, just like most symbols. Sideways range, sideways range, sideways range, almost every day, almost every week. There's no big gains to be had. Crude oil yesterday posted its biggest day. I think it was down like 300 ticks or whatever or more through the 24-hour period. Largest range loss day, largest down day since September 2015. Big deal. You know what the greed factor is? Everybody who ever traded crude before looked at it and like, oh, if only I caught that. Who the hell cares if you caught that or not? That's one day. There have been a lot of days since September 2015. That was a year and a half ago. All right, that's what? Nearly 500 days, 400 plus sessions. Most of those sessions didn't go 60, 70 ticks. What difference does it make if one day went 300 plus? It's an outlier. You can't build a career out of that. Do you want to be a career trader? Then you have to do what builds a career. And what builds a career are small gains, increasing size of contracts, go from there. Start with one contract, and then as soon as you comfortably can, with your account balance, go to 2. And as soon as you can comfortably go from there, 4, and then 8. And then whatever the symbol that you trade allows. In the case of the S&P, size allows a hell of a lot more than any of us are ever going to trade on an individual basis in our own accounts, that's for sure. So that's it. This is the CM Scalper approach. Just look for 1 or 2 index points net per day, increase your contract size, and you're good to go. Hope this helps. Looking forward to trading with you soon. And as always, best trading wishes.